What's up everyone, and welcome to another Bitcoin market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with Bitcoin on the monthly time frame. On the monthly time frame, we haven't moved much since the monthly open. I think that is because people are kind of pricing in the fact that there is this large drop, so investors are probably thinking, well, I should probably buy some because we just had a significant drop, but I also don't want to get caught in the beginning of a bear market, and so that's where you get this kind of indecision so far in the market that we've seen, where we haven't had a lot of movement on the monthly time frame. If we do not end up setting our monthly higher low here on this drawdown and come up and form most likely a lower high, we will probably set it somewhere on the weekly support level below this, which is down here at about 19,400. Now you see the way that the pattern looks right now in price is it looks kind of like what we would consider a bear flag. Now a bear flag is where you get, it comes after a push down, and it's a continuation pattern. It's a bearish continuation pattern. So we have this drawdown in price. We have slight sideways price action, slightly sloping upwards, as you can see with these parallel lines here, and then continuation downwards. So we could end up seeing that here. Right now, if this weekly closes like this, that is not good, in my opinion, for higher prices, because of the fact that it fits within the parameters of what would be considered a bear flag, in my opinion, and other people trade that pattern because it's a very common pattern. So if that does end up playing out, that could end up leading us to some wreckage down here to about 19,500. So let's go down to the daily time frame now and see what we're working with here. So on the daily time frame, we have our daily resistance level that we talked about for several days now that has held up absolutely picture perfect. If we look at, it's this candle back here from February 7th. If we look at the body of that candle, if we were to short that with our stop loss above the gray, when we come into it right here, we would have got our orders filled, and then now as we go down, we're in profit. So right now this trade would have already yielded approximately 10% on spot. On margin, that's about 18% if you're doing 2x leverage, and obviously more if you're doing more leverage than that. So far, very good trade there. In terms of this equilibrium, like we talked about, we need this equilibrium to, we don't need the equilibrium. We need the bulls, if we're a bull, to make a higher low here in comparison to this one, and then subsequently break to a higher high to change the trend back to the bull's favor. If we break this to the downside, it's very likely that we're going to go down to a minimum of 24.4, and then if we don't stop there because of the weekly bear trend like we talked about, we could end up seeing us go down to the weekly support level down here at about 19,500. Right now, if we look at trend following indicators like the super guppy, we haven't even tested the red EMAs yet. So the price action is going to have a pretty tough time breaking through this, even if it does break up on the first test. But these are weighing the price down. Every time we come up, it's like pushing it down because people are filling their shorts on these EMAs, and that's subsequently where you're seeing these drawdowns here. If we go to the 4-hour time frame, we can recap the trade that I talked about on yesterday's video. I believe it was yesterday's or the day before. We talked about this pattern right here, which was just a clear bull trend, a low, high, higher low, and then higher high with 2 candle closes above this key high. Subsequently, we came up, we formed a lower high and then a lower low, so we started a bear trend here. Then we came into this gray zone. I talked about going short on this zone. You can see that when we came into this zone, it acted as resistance perfectly here, and subsequently drew down even past the target that I had drawn yesterday, which is about 3.78%. So it actually ended up drawing down to about a little over 6%. So that was about a risk reward of about 5. That was if you got both of these orders filled, or if you would have moved this, if you would have just filled on the body of the candle, it changes the risk reward and things like that. So that was a good trade. The interesting thing about this one, reason why I wanted to point this out as well, is because we have the same opportunity again right here. We have the same exact, not the same exact setup, but it's very similar to the setup that we just had right here, which is a support level that should have held a support right here, but we didn't. We just blew right through it. Same thing right here. We had a bull trend. So if I slide this over, you can see low, high, higher low, and then higher high with 2 candle closes above the key high. So this gray zone should have acted as support right here when we came into it. But you can see as soon as we came into it, we pushed right below it, closed 2 candles below that zone. So now this is a strong resistance zone for price. So now we can just move this down and say, all right, now we're going to go short on this zone. And you can either enter on the bottom of this level on the wick, or you can push it up to the body to get a better fill, a little bit higher in price. But this is the main resistance zone for price. So, now what I'm going to do, now that I already took the other trade, is now I'm going to take this trade, which is a different short. Still a short though, still consistent with the overall high time frame daily bear trend that we're currently in. Right now, this likely will hold for the first test. So if we come into it and we come down and we go for a new lower low, we'll likely go down to the dark blue zone here, which is a daily support zone, just because, that's the next high time frame support zone. One other thing, the reason why I just had that pause there, by the way, if you were wondering, can you not think straight? It's because I just saw this head and shoulders pattern right here. This potential for a head and shoulders pattern, rather. So if this ends up playing out, if this ends up being a head and shoulders, which we can see right here, what this will tell us then is we will expect a price movement down to, once we measure this, we'll know, from the head down to the neckline, which is right about here, about $3,800. So if we take that down from $3,800, takes us down to about, sorry, my thing. Oh, it's somewhere around $31,500 is where we would move down to. So if we were to, this trade could end up taking us down to that level. That'd be pretty amazing. That would be, somewhere around here. Yeah, that's given it a conservative target. That would be a really, really good trade in terms of risk to reward ratio. So I'll definitely be taking this. We'll see what we end up getting. If we look at some of these trend following indicators once again, we can see that the bulls were starting to show up right here. You can see they started to work their way through those red EMAs. The EMAs got tighter right here, and then we started to shift them back into the bulls' favor right here until subsequently we broke down below them again, tested them, and now we're breaking down again, and you can see they're flipping back to be red right here. So the bears are regaining control on the shorter term time frames, but the bulls are really going to need to show up here relatively soon for us to have some confidence that that daily support, the daily equilibrium pattern is going to break out to the bull side. Currently, right now, like we've talked about on this channel, the bias for this pattern is a bearish continuation because of the fact that we already have this bear trend intact. So the trend is consistent with this breaking down. The other things that are consistent with it is, this super guppy indicator here, the Ichimoku cloud indicator, which is bearish as well. So all of those factors combined, tell me this is likely to break down. So be aware of that, but also be aware that, relatively speaking, this is still pretty cheap Bitcoin in terms of the previous price action that we've had. So it still could potentially be a really good spot to buy long-term Bitcoin. But everything in this channel is for educational purposes only, is not intended as financial advice. So take it with a grain of salt. But that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we just released on Leutheria.com this last month. And you can get 20% off that course and learn all of the fundamental elements that you need to get started generating consistent profits, trading things like Bitcoin and other crypto assets. All right, everyone. Until tomorrow, onward and upward.